Okay, recording this video on Sunday, the 10th of April 2022. It's just gone 9:16 p.m. Chicago time. Do hope you are doing well. So, I'm short from the open at 5 this afternoon, Chicago time, at 86.5 on a big trade that I suppose I've been talking about lining up for a couple of weeks now. It's big under the lip setup. And I want to talk about risk and return on these types of trades where we kind of come back in for a lower risk entry point, although the stop is pretty far away. Anyway, I'm going to show you what the under the lip setup comprises of. It's one of my favorite setups. It combines better pro-am and better sine wave. And the thing I like about it is that the stop can be placed relatively tight on this, although because we're talking about a daily chart of the E-mini and all the other indices in terms of points, it's quite a few points. But anyway, we'll talk about the risk and return shortly. But here is my kind of traditional setup of the better indicators with two charts side by side. Everything on the left hand side is to do with volume. We've got better momentum below the price bars, measuring the volume momentum as opposed to a price-based momentum calculation. And on the price bars themselves, we have better pro-am. Better pro-am uses the average trade size to identify above average and below average trade size. And the professionals are higher average trade size and the amateurs are lower average trade size. Professional activity is shown with blue bars and amateur activity is shown with yellow bars. And the nice thing about better pro-am, because we know that the professionals kind of leg in and leg out of positions, is you can trail a stop based on their professional activity. And eventually one of those trailing kind of stops will get broken, and that'll show you there's been an extreme kind of activity in professionals and it could be reversing. On the right hand side we have everything to do with price, which is the better sine wave indicator, and below the price bars here we've got the plate of spaghetti that is a better sine wave, calculating the cyclical activity in 3 different time frames. And once we know the cyclical activity, we can figure out what the support and resistance lines are going to be in the price bars themselves, and we've got the low, intermediate and highest time frames with progressively thicker lines showing us those support and resistances. And then we define trends as breaks of support and resistance. So if we break into an uptrend, we break above resistance and we go into a trending move which ends with an end of trend. So this pattern is called an under the lip pattern, and it happens when we've had a break of better pro-am and we come back under this kind of, as I see it, like a wave, and we're under the lip of this wave where we've got the trailing stop kind of in better pro-am. It will start to be, if we're right on this will be ratcheted down as the trend move kind of progresses, just as the trend better pro line kind of ratcheted up as the trend progresses here, and then finally we get a break and we're kind of under the lip. And then the signal that I'm looking for is resistance on the intermediate time frame on better sine wave on the right hand side here. So we had a break, we had resistance on the lowest time frame, and about 10 days ago I put out a video and I was a little bit early on that call saying, you know, this is important. And we actually kind of pushed past there and we had an overshoot of the break of resistance here, and it's caught by the next highest time frame. So it finds it difficult to get into to go any further than that. It's just overshot one time frame and it's caught by resistance in the next highest time frame, and it tends to kind of come down. So what's good about this is if these two lines, these resistance lines, are kind of fairly close together, we've got a really kind of tight stop in there, which is good. If it's a big kind of move, it's not as consistent. The other thing is a break above the high of that resistance. We know that we're wrong. We're actually breaking into a bigger pattern, into an uptrend that'll go pull back to end of trend on at least the lowest time frame. So it's a high probability kind of break point, and it either turns into a nice trending move on the upside or a nice trending move on the downside. And what we can do is we can keep the stop really tight on this activity, because we know if we've got above this resistance here, we can actually reverse the trade and kind of go long because it'll be a big kind of trending move to the upside. But if we've got it right, it'll run to resistance on the intermediate time frame when these bars kind of come down. Now with the indices, I mean, you can keep it simple and kind of just check the E-mini chart itself. It's the biggest kind of traded market on a daily basis that's got some activity. I think the bond market is bigger, but it's just tends to be a bit more sleepy. But you know, the E-mini is a super big kind of traded market. So you know, you could be just looking at one chart for this, but I tend to like looking at all of the indices because they kind of play out slightly different patterns. And I actually like looking at the three different ways of looking at the indices, which is to look at the index itself, the futures market, and the ETF on the index. So here we're looking at the ETF on the Dow, which is a DIA, and you can see we've got that set up. We've got resistance on the intermediate time frame, and we're under the lip here. So we've got an under the lip kind of setup. And I'll show you the overbought oversold system where these signals kind of pop up with little arrows, white arrows in this case, because it's a sign of weakness. So on the ETF on the Dow, we've got that set up. On, whoops, let me show you the next chart here. The next chart here, we've got Dow futures, and this is slightly different because we have not broken the trailing stop on Dow futures, although we do have with Friday's activity. You can see there that we've got resistance on the intermediate time frame, and it's super close to the resistance on the lowest time frame. Again, I like that for a setup because it means we can keep our stops really tight on this, but it's not an under lip because we haven't had Pro-Am kind of flick around. So that's the Dow futures chart. The Dow index chart, the same thing. We haven't had a flick around on better Pro-Am here, so we're not technically speaking under the lip, but we do have resistance on the intermediate time frame. Nasdaq, we do have the setup kind of happening here. Although we're a fraction early, we're a day, maybe 2 days early in terms of getting that cross. On the intermediate time frame, we got the better sine wave kind of starting to come together. The market's definitely weak. We've come off over the last week in the Nasdaq, but we don't have that plot yet. But it's due in. Whether it's going to happen in Monday's activity, we're going to wait and see. And what's interesting for me is this last move up on the Nasdaq was exhaustion buys here. We're under the lip. There's our lip. And potentially this is kind of going down. So we've exhausted quite a lot of the activity on the upside here, and some would say that that's kind of a last roll of the dice where we get that exhaustion buying activity. It kind of exhausts people on the upside and it kind of gives way, and all of a sudden we kind of reverse and go the other way. The futures market is also under the lip here at NQ, but we haven't had the cross yet. Yet to come through with that probably in the next day or so, but you can see we have been weak on the Nasdaq. And then the index, well, this has not kind of played out. The pro line for better Pro-Am has not broken there, but that's a big rally with the blue professional bars. And it's interesting that we saw blue professional bars lead to weakness here, but the last time up into the highs, 16,000 on the Nasdaq, it was led by the amateurs. We had amateur up bars here with Rambo patterns into those highs, and we never saw blue professional bars there. But for me, if that low gets broken, that's a killing fields, because what the professionals do said, whoops, I'm late, I didn't get out at the highs here at 16,000. What I'll do is I'll buy this low, I'll force the market up, and I'll use this activity to take profits and get out. And that would be a kind of a killing fields area. Killing fields typically a little bit volatile, so they'd move the price up and down a little bit during that activity. It wouldn't be just a straight shot all the way down through 12,005, but we'll wait and see. But we don't have an under the lip trade there, not a classic one, but we do have resistance very close in on the index when we get that cross with better sine wave. Here's Russell, definitely under the lip here. We've had Russell's been the weakest of the lot in terms of these trades. Again, you might say this is like a killing fields kind of thing where they caught it at those lows, pushed it back up, used that activity to kind of get out there. If we break the lows kind of down here below, what is that, 180, something like that on the downside, that will show that all that activity was selling short. There's that resistance, and we pushed away quite a ways from that resistance on the Russell ETF. We're under the lip on the futures market here, there, and we've got that cross that came in a few days ago with a pullback resistance level there. And then lastly, we don't have Russell index data, so we can't have a plot with better Pro-Am. You can see there it just kind of zeroes out. And then lastly, the SPY. So we're talking about the S&P 500. Here we broke above this trailing stop here, so we kind of flicked the other way, so we don't have a classic. This is the futures market. We're definitely under the lip here, and we printed with Friday's activity. We put in, actually it was 2 or 3 days ago, we put in that resistance on better sine waves. So we've got our resistance on the intermediate time frame, and again, look how close those levels were. They were almost identical there. And then the index, slightly different break of better pro-am, so it's not a classical under the lip. Also, I like looking sometimes at Apple because it's kind of indicative of what's going on in the broader market. So many people are in the Apple kind of trade, hedge funds and small investors and so on. So it's really interesting to kind of look at that as a pattern. And again, here you can see we're under the lip. We've had an exhaustion buy pattern, having had all of this professional activity at 170, 180 up here with exhaustion buy and bearish divergence, another exhaustion buy pattern into there. We kind of run out of juice, and we've started to turn over, and we're about to have that cross on the better sine wave intermediate time frame there, and that'll come in the next day or so, and that'll be an under the lip kind of pattern. So you can look at this on the overbought oversold system here, and this is what you'll see when you bring up, this is kind of the simplified view, one chart view of the better indicators to get the major kind of picture, where that's the sign of weakness, which is an under the lip trade. So it's the combination of we're under the trailing stop on better pro-am, and we've had a cyclical resistance on the intermediate time frame, having had a little bit of a push above resistance on the lowest time frame, and there the signal kind of came in a couple of days ago, and that's an interesting kind of pattern. Now, where's it likely to go? What we'd be looking for is something big on the downside. And if I go to the futures market here, we're at least looking for a move of resistance on the intermediate time frame to support wherever that kind of comes in. And we've just had that cross. The stop can be really tight, so the stop can be up here, 46.27 level, and if we get back above that, we're likely to kind of run to the upside. So it'll turn into, instead of just a regular stop, it'll be a reverse stop and go long at 27.5, but 27.75. So I'm in from the open on Sunday, which was 86.50. I'm short just a small number of contracts to start with, because the stop there is 140 points, which is pretty big. But on the potential where this might run, we're looking at getting below the low of this last move. So we're looking at at least kind of a 4,000 kind of level that we would be looking to take profits at, that or kind of beyond, just seeing how big this move actually, if I'm right and this kind of accelerates to the downside, it could be a really swift kind of sell-off, and we could get there relatively quickly. But anyway, kind of getting ahead of myself. So the stop is 140 points away. The potential upside, though, if we got to 4,000, is in the order of 480 odd points. So we're talking about a 3.5 risk return between those two. So it's a small position at the moment. Let's see if it kind of starts to get some momentum on Monday. If we got this right, we'd have a big down day on Monday, and that'd be nice if we get that. The kind of fly in the ointment might be that on the 15-minute chart, we've not run out to pull back to end of trend on this 15-minute chart here. We're at 444, down here is the low, and we should have kind of got through this resistance on Friday's activity, and we did not do that. Thursday and Friday we were weak, and we closed weak on Friday. So these two on the highest time frame should have been playing out, pull back to end of trend, and we didn't do that. So if we break 4444, that's really important for the downside, which means we didn't get a completion on this pullback to end of trend, and we're really weak because the market just refused to kind of go out there and test. So I'm not sure you call that a fly in the ointment, but maybe we do have to still on Monday's activity kind of put in some type of pattern where we get rid of this kind of cyclical activity, pull back to end of trend. We'll wait and see. Lastly, let me just show you this chart on the 1500. So this is the open. We had a tiny bit of strength at the open, and then it kind of gave way, and we're 20, almost 30 points to the good on the downside now. So that's it. It's a big trade. It's got a big stop on it, but it's got a big payoff potentially. So let's see how it works out.